Welcome back to Return My Capital. Today we're taking a look at an ETF. SCHG is the ticker symbol. This is an ETF from Schwab focused on large cap growth. You'll see over the last year it is up 17.5%. Year to date, still down almost 6.5%, although it has rebounded nicely from the bottom. It was down at 22 and a quarter, now back up to 26. Again, you see over the past year, it is down from all-time highs up here over 29, currently just over 26. So slightly in the upper half of the 52-week range. What you have to love here is the 0.04 expense ratio. And really, when you look at fees over time, it's going to be very hard to beat exposure to these types of companies with a 0.04 expense ratio. Now, it is focused on growth, although it does pay a slight dividend of a 0.44% yield, and that's a quarterly payout of 11 cents. You'll see the top holdings. From a sector perspective, technology makes up almost 50% of this ETF at 47%, followed up by communications, so Alphabet, Meta, at 13.25%, consumer cyclical at 12.5%, healthcare 10.3%, financials 7.5%, industrials 3.5%, consumer defensive or staples just over 2%, materials 1.5%, energy almost 1%, utilities 0.7%, and real estate just 0.5%. You look at the total returns of SCHG here compared to the S&P 500 over the past year, outperforming by about 2.5%, and then SCHG, outperforming the S&P 500, say the benchmark index, across all time frames here, both the 1, 3, 5, and 10-year perspectives. But again, on the 1 year, SCHG is outperforming the S&P by 2.5%, and then 17, almost 18% on the 3 year. 22% on the 5 year. SCHG is at 128. The S&P 500 is at 106.5. And then on the 10 year, even greater dispersion here. SCHG at almost 310% over the past decade. Pretty incredible. S&P 500 almost 220%. Of the individual holdings, the top 10 are Apple, Microsoft, Nvidia, Amazon. Let's see, since Alphabet's broken up into two share classes, actually Alphabet would be larger than Meta. You've also got Broadcom in there at just over 3.5%. Tesla, Eli Lilly, 229 total holdings. The top 10, although I guess really in this case, this would be the top 9, make up almost 55% of this ETF. So because of the sheer size of these mega cap tech names, it's really dragging up that, say, overweight nature of mega cap tech. When you've got companies that are 3 trillion and over 2.5 trillion, it's really going to soak up a good portion of this cap weighted ETF. Here, again, this is the actual SCHG prospectus page from Schwab. Again, you see the top 10 holdings there. You see the sector weighting. Now, I did actually pull out the entire 330 holdings. So outside of that top 10, you've also got Visa, Netflix, MasterCard, Costco coming in at number 14, United Health, Salesforce, Palantir. Let me go ahead and actually increase the size of this. You're seeing the sectors of those companies. What you're noticing, of course, is that there's a significant amount of information technology, right? We already talked about the fact that tech makes up half of this ETF. So you've got Palantir, GE Aerospace, which is actually the top industrial in this ETF. You've got Linde, that's your material exposure there for this ETF, followed up by ServiceNow, Accenture, Intuitive Surgical, Intuit, Uber. Kind of funny to think about Uber's technically classified as an industrial. We'll see how long that lasts. Booking Holdings, Progressive, Thermo Fisher, Adobe, AMD, and then S&P Global rounding out the top 30. So there's some of your individual holdings. Now, yes, this is a growth-focused ETF. There's no doubt about that. But because some of the mega cap tech names have started to pay a dividend, there should be greater dividend growth for this ETF into the future. Currently, it yields under 0.5%. It's been growing, a 5-year CAGR on that dividend of 3.17%. But really, looking at this dividend growth history chart here, you see it's been choppy because the underlying holdings can change over time. And since it's been such a growth and tech focused ETF and will continue to be more likely than not, you would expect, again, continued choppiness of the dividend. But again, as Alphabet continues to grow their newly formed dividend, Meta, Microsoft, Apple, these are all dividend growth companies now. You look at the top 10, again, Apple, dividend, Microsoft, dividend, Nvidia, barely, but they do pay a dividend. Amazon does not pay a dividend. Meta does now. Broadcom is one of the best dividend growth charts you'll ever see. Tesla, no dividend, obviously. Alphabet now pays a dividend. Eli Lilly, I believe, does. You look at Nvidia, just out of curiosity here, their their dividend has always been hilariously low. It's almost begs to ask the question of why even pay it. But they do pay a 4-cent annual dividend for a 0.04% yield. And I know this isn't the point of this video, but just out of curiosity, hey, at least they're growing the dividend at a 20% rate on the 5-year CAGR. But yeah, I mean, you look at this dividend, 1 cent, 1 cent, all the way until, wow, a whole 2 cents that started getting paid here in 2018. Although maybe they're going to start taking it more seriously in the future. Who knows? Let's go ahead and just quickly compare SCHG here. VUG would be a comparative. A peer, it's tracking, again, large cap growth. So a lot of the underlying holdings are going to be the same between SCHG and VUG. Now, because of the internal makeup of these ETFs being, again, focused on large cap growth, that's inherently going to encompass a significant amount of the information technology sector. So I've also added the IT sector specific ETFs from Fidelity and Vanguard. So that's FTEC and VGT. And then we'll compare all of this against the benchmark of VU being the S&P 500. You see on the year to date, the worst performer is BGT and FTEC. Again, those are the IT specific sector ETFs. Those are both down 11.5%. You've got the S&P 500 now year to date, now down only 5.5% after some recent bounce back off the lows. If we look at the 1 year, the top performer is again going to be VU. They are only down 3.5, or excuse me, that's still the year to date. On the 1 year, the top performer is actually going to be SCHG, up 17.4%, followed by VUG. So the growth ETFs are the top performers. The IT sector specific ETFs both coming in around 14.3% over the past year. And then the Vanguard S&P 500 ETF, VU, coming up the trail here at just up 12%. Over the past 3 years, again, SCHG leading the pack. Now, what's interesting is that SCHG and its peer to compare against is VUG, but over the past 3 years, SCHG is actually outperforming VUG by over 5%. So that was interesting to see. Very tight comparison here between FTEC and VGT, the IT ETFs. FTEC coming in at 52.8%, followed by VGT at almost 52%, and then at the S&P 500 at 36.5%. On the 5-year, it's more of the same, although you do see an inversion of those IT-specific ETFs are the top performers now. So top performer over the past 5 years is the Fidelity IT ETF at almost 140%. About 1% less than that is VGT at 138.4. And then you've got SCHG at 130, let's say 132%. And again, VUG trailing SCHG now by a more significant margin at, let's say, 119%. And the S&P 500 just below 100% over the past 5 years. And the last we'll look at here is over the past decade. And you'll start to see the dispersion broaden out here. So the IT sector ETFs are the top performers over the past decade. You've got VGT at 419%, FTEC at 411%, SCHG at 281, VUG at 256, and the S&P 500 at 168. I would say my biggest takeaway from this charting is Historically, I've invested in VUG for my exposure to large cap growth, but I mean, the devil's in the details, if you will, and it's pretty obvious outperformance for SCHG over VUG. Over the past 10 years, you're talking about, let's say, 25% outperformance. So that's certainly significant if you've got any amount of capital invested for a period of a decade. So that's a quick little review of the SCHG ETF. And appreciate you watching. If you got anything from it, great. If you enjoyed it, like, subscribe. Have a great weekend. Take care. Bye-bye.